So the stock market's booming today. It's actually had a couple good days this week. Far be it from me to rain on that parade, or the Kudlow Trust for that matter. But the reality is stocks may be, to coin a phrase, irrationally exuberant. Actually, it was Alan Greenspan's phrase. Anyway, someone who is rationally exuberant, Mr. John Carney, Breitbart economics and finance editor and co-author of the Breitbart Business Digest. Welcome back, John Carney. So let's just start with this. Stocks are pricing in interest rate cuts as we get towards the year. But I don't know, inflation, money supply, things of that sort suggest that maybe interest rates are going to go up instead of down.
Yeah, look, it doesn't quite make sense. They look at the inflation numbers and they said, okay, it came down from January, so maybe the Fed can cut. The Fed's not going to cut. Inflation is way too high unless we get into a serious economic calamity, in which case the stock market should be booming right now. So there's a contradiction in the thesis of the stock market. I would be very skeptical of what I've been seeing, both, not in just the stock market, but in the derivatives market right now that is pricing at around 3 or 4 cuts by the end of the year. And meanwhile, we have Fed officials telling us every time we hear from them, we're definitely not going to cut. We're holding the line. We're probably going to raise one more time, and then we're going to hold it through the end of the year and probably into next year. But the market has been at loggerheads with the Fed for most of the last year, basically. And it got on the same page for about 2 months. But then we had Silicon Valley Bank, and they said, that's it. Financial crisis, they're going to have to cut later this year.
I'm just looking at numbers out today. The personal income report basically shows about a 5% inflation rate.
Right.
4.8, 4.9, 5.0. Consumer spending was a little soft. Wage and salary income, however, is very strong. So I'm just saying, I don't know if they want to look at these numbers. Now, that assumes the Fed will maintain its 2% target. Right now, the inflation rate is about 2.5 times the target. So they're going to have to tighten the screws some more. But the market thinks what? That they're going to raise the target to 3 or 4%?
I think the market thinks that the Fed will get to won't officially raise the target, but just chicken out and back off. And those numbers you're talking about, if you look at, again, I'm going to get to my favorite one, the Cleveland Fed median, and that was 0.4%. That's lower than the 0.6% we saw in January, but it's been 0.4% more or less since August. So that's no progress at all against inflation. And I think that's really telling us that the Fed hasn't gone far enough yet. And Fed officials are going to look at that number. They don't talk about median inflation that often, but they can look at it and they say they want to see several months of progress before they'll think that they're there. Right. We haven't seen several months.
Now, this is almost making a heretical sin for economics reporters or analysts or whatever, but you're looking at the money supply, the M2 money supply. I confess I do, too. I was actually trained as a monetarist a million years ago. We have up on the full screen a picture of the level of M2. And your hypothesis is it peaks later than you think? Tell us about that.
That's right. So they redid all of last year's numbers in the March report. And what we learned was we thought that M2 had peaked around March, when the Fed first started raising rates. That actually seemed a little improbable to me, just because why would it peak right when the Fed was starting to raise rates? You would think there would be a lagged effect. So what we really saw was that in the new data, it stays high from March through July, peaks in July, and then starts to come down. The lesson from that is that inflation, therefore, if you think there's a 12 to 24-month lag, should still be running high right now, which it is. So this solves part of the mystery, which is, wait a second, if we peak, we've said this on the show, you were like, the money supply has been coming down for 9 months. It wasn't coming down for 9 months. It's been coming down for 5 months. So we still have a ways to go before we hit whatever the lagged effect from the peak was.
What the hell? Nobody looked at it for 2-3 years.
Right.
Jay Powell says routinely he never looks at M2, which is really a stupid thing for a Fed chairman to say. You don't have to be a dogmatic monetarist, but it's a key indicator.
It also is one of the best indicators to help. Look, I was a skeptic. I hadn't looked at M2 for a while. But if you wanted to predict the inflation wave we had, M2 told you that was coming. And so I do think there's a lot to be said for the idea that M2 is probably going to give us an indicator of what inflation might be.
You know, Ed Hyman says when M2 goes to extremes,
right,
that's the time to pay attention to it. Has a lot to do with bank deposits and a lot to do with oversized federal spending. Anyway, John Carney of Breitbart, thank you for visiting with us. We appreciate it very much.